Hello, welcome to the Job Walk Podcast, an interview-style mobile podcast where we go out into the field where the professionals are to share helpful information on buying, selling, remodeling, designing, or building your home. So join us for a Job Walk. Hi, we're here today with Michael Jacobo with Berkshire Hathaway in Carlsbad, California. We're going to have a discussion about the current market conditions in real estate. Michael, can you just give us a quick rundown of your experience in real estate?
Yeah. Hey, Barbie. Thank you so much for having me here today. I really appreciate it. I'm excited to kind of go over current market conditions and everything that's going on. Just a little something about myself. Been in real estate for over 21 years now. Originally started in Los Angeles, moved down here in the early 2000s, and been with Berkshire Hathaway, which was Prudential California Realty before that. And still here today, still doing business, loving what I do every day.
And one of the things I appreciate about you most is you'll sell just about anything, right? Mobile homes, land, multi-million-dollar estates.
Absolutely, absolutely. It doesn't matter what it is. If we could sell it and we could find a buyer for it, I'm going to do it.
That's great. Well, let's dive into the market conditions. I think everyone's pretty interested about that right now. So would you say we're in a market of transition? Where do you think we are right now? Question number one. And then the second question is, what do you look at every single day as a realtor? When you get up and you're researching the market, what are the three or four things that you're looking at?
Yeah, both really good questions. So let's talk about the current market conditions, where we are. Now, mind you, people might be listening to this, so they might not know when they're listening to this. So we are doing this podcast in the middle of July 15th to be specific, of 2022. I'm going to talk about the numbers in San Diego County specifically. Our current market conditions are definitely different from what it was in the beginning of the year of 2022, in January, February, March. We are now seeing a transition of inventory rising. We're seeing less buyers out there jumping on the first thing that they see. And there's a couple of reasons why that is occurring. One major reason is obviously due to interest rates. Interest rates have doubled since the beginning of this year. Another reason I see is the simple fact that now people feel like the peak is here. Buyers don't want to feel like they're buying at the peak. And so I think a lot of buyers are kind of like on the fence as far as where they're going to be or what they want to do, whether or not they want to buy currently, whether they don't want to buy. Perhaps some buyers had buyer fatigue from earlier this year and just kind of holding off.
So has the pressure to purchase sort of waned a little bit? I mean, when you were working with buyers, say in January and February and March, was there a lot of pressure you felt like buyers were feeling in terms of they needed to buy something right then? Has that changed?
Yes, I would agree. Back then, you had maybe 30, 40 people coming through an open house, or somebody 20, 30 offers on a single home, just because there was more buyers than there was availability out there on the market. That is the biggest thing that has changed. With inventory rising, now buyers have more of options.
So let's talk about the inventory just a little bit deeper. So Michael has up here in his office some comparables from month to month. Can you share with us how the inventory has changed over the last few months specifically?
Absolutely. So we'll go back even further. We'll go back to January, February. So in January of 2022, mind you, our interest rates were in the low twos at the time. 30-year fixed conventional.
Hi, we're here today with Michael Jacobo with
that 2% range back then in January, February has definitely changed to where we are today. let me go back as far as where we were in terms of inventory levels. So back in January, we had a total amount of listings of about 1,500 single-family residences available in San Diego County. The amount of properties that were going into escrow was nearly double that. So we had a very, very low inventory. Homes that were basically our average days on market at that time was less than 1 week on the market. Fast forward to I'll even go into the following month, February, we saw that increase. Total amount of listings went from 1,500 in January to 1,700 in February. We did see an increase of the amount of pending properties go from 2,800 to 3,000. And we kind of saw that continuing on up until, I would say, May. Up until the middle of May to June is where we started to see that change. One of the biggest reasons for that change was a simple fact that interest rates nearly doubled to what they were beginning of the year. We are now currently, depending on what I talked about earlier, depending on the conforming rate, whether it's high balance jumbo loan, but you're anywhere between 5.625 as high as up to 5.75 30-year fixed.
But that's still a great rate, right?
Still a very, very good rate. If you remember back in our heyday in 2004, 5, 6, when the market was taking off, that was what our rate was back then. I think it may have been even in the 6s, if I'm not mistaken. So still very good rates. It's just I think the public have gotten used to the numbers being so low during the Trump administration. That brought the interest rates down dramatically. They were very, very strong. And I just couldn't see ourselves sustaining that for much longer because of our prices started to increase dramatically.
So my second question was, now in this current market, we talked about a little bit of what's happened in the last few months. Now we're in this new market dynamic. What are the things as a realtor that you're looking at every single day that's giving you an indication where things are going so you can advise your buyers and sellers appropriately?
Yeah. So I look at I follow the CRMLS, which is our local MLS here in San Diego County. I look at that every morning. So first thing I'm doing is seeing how many new listings are hitting the market, of those how many properties have gone into escrow. That tells us a pretty good story. It tells me a pretty good story as far as what is the overall picture of what's happening on a daily basis, weekly basis, monthly basis. In real estate, it's very here in San Diego County specifically, I would say it's very specific to community by community, because you'll see some communities where homes are still selling very quickly. You'll see other communities where your average days on market are exceeding almost 2 months. So it just depends. And what I do is I really want to just follow along where my clients are looking, perhaps, where my listings may be, so I could keep up to date as far as what's happening on the market, what's happening today, what's recently happened, and what we believe will be happening in the near future, so I could best share that information with my clients.
And then you talked a little bit about days on the market, that being something important to watch, and the amount of inventory that's available and how much supply of inventory. Are you seeing things fall out of escrow? Could that be another indicator of a transitional market?
Yes, we are seeing things fall out of escrow quite a bit. I think buyers are, like I mentioned earlier, buyers are over that whole buyer fatigue. Where they felt earlier this year that they had no say in the game. There was no, what's the word I'm looking for? There was just no way. They just had to do whatever they had to do to get the property and get it accepted. They couldn't negotiate for anything. That is where I'm seeing the biggest change today.
Can you give us some examples of some of the differences in the offers that you're seeing today than you would have seen a couple of months ago?
No longer are we seeing the offers of well above asking, or even above asking for that matter. We're no longer seeing rent backs for free. We're no longer seeing the buyer willing to pay for all the closing costs. We're no longer seeing where buyers were having to buy the property as is in its present condition. And that's where we're seeing a big change in where homes are falling out is now buyers feel that they can negotiate once they do their home inspection, once they're in escrow, and they want to reconsider the purchase price, try to negotiate a lower purchase price, try to negotiate closing costs, whatever that may be. And if sellers aren't willing to accept that, you're seeing deals fall apart.
So along those lines, in the negotiation standpoint, I mean, do you feel like we're at a better place in terms of it being a buyer's or a seller's market? Would you classify it as a buyer's market now, or do you think it's more of an equal space right now?
We're getting to a point where it's going to be equal very, very soon. Okay. Our typical healthy market here in San Diego County is anywhere between 4,000 to 6,000 homes on the market. We are still slightly below the 4,000, which would be all indication that it's still a seller's market. However, what reality is and what people look at in the past is for numbers are two different things. We are seeing the agents that are in the market on a daily basis and doing business every day see that and understand that, hey, the market is definitely changing. Buyers are definitely starting to get a little bit more of the upper hand. You're going to have some sellers that are going to draw their line in the sand and not willing to budge. And you're also going to get those sellers that still feel that they could get the top dollar that they could in February, March, or even April. And that's just not happening right now. So I am seeing that shift as we're speaking happening.
So give me some examples. In fact, we were talking a little bit earlier about a property that you just listed and what would have happened previously versus what is actually happening now in regards to interest in that listing. And what kind of conversations are you having with the sellers before and now in terms of counseling them on where their pricing should be? Not to expect to get multiple offers, because I have a feeling a lot of people are still living in the past maybe a little bit.
Absolutely. I think that's, yeah.
Yeah. So how are you sharing that information, and what does a conversation like that sound like with a seller?
A seasoned agent understands that honesty, being upfront with their clients is the absolutely most important thing. We are going to have those agents out there that are going to just do whatever their client tells them to do to win the listing. That's not in the best interest of the seller. The way I like to do my business is I like to explain to the seller exactly what's going on, whether it's good, bad, or indifferent. I think it's important for them to know. So what I do is I do explain to my sellers what, had we listed it 5 months ago, where we would have been. However, we're not in that situation. Here's where we are today. Here's what's happening today and what numbers are looking like in today's market. Now, our average days on market are nearly 60 days, depending on where you are, depending on what the amenities of the home, what it has to offer. As I mentioned earlier, a few months ago, we were seeing homes that were getting multiple offers. So I have to have that I have to set the expectations up front and have those hard conversations with our clients to let them know what reality is, where we are, what to expect, what not to expect. And those are some hard conversations to have, but if you come across genuine, if you come across that you care, and you come across that you're going to do everything possible to still get them the best out of the situation, they will listen.
And is it now that the prices have adjusted maybe a little bit and the terms are a little bit different, is it relative in terms of if they're going to be selling a property now to move into a different property, even though the sales price of their current property might be lower, is it true that the new home that they're purchasing might be lower as well?
There's a good chance of that being. I'll go back to where I said earlier is that it just, in our market, it's very area specific as far as values are concerned. One major factor is amenities. So if you're going from a home that has no view, no pool, no upgrades that you're selling, and you're looking to buy a property that may be closer to the ocean or has an ocean view or is completely renovated or has a pool, it's a good chance you're still going to be paying more for that home. But yes, I think in the overall aspect, you are correct. You should see that also on the purchase side, the value of that home on the other side be lower as well.
And then let's talk about the buyers a little bit. What kind of conversations are you having with buyers? I know you told me in a previous conversation that we had, you've had buyers that you've been working with for 6 months or so and just haven't been able to secure a deal. They've lost out on a lot of things or just can't find exactly what they're looking for. Are you feeling hopeful now that you're going to be able to find a place for those buyers? And what kind of conversations are you having with them in terms of waiting, or should they buy right now, or those kinds of things?
My conversation is simple with all clients, sellers or buyers, but speaking with buyers, it's what is right for them, what in their situation. Every person's situation is going to be different. I would never say that it's a bad time to buy because you don't know their situations on a personal level. In terms of, yes, I have a client that we've been looking for nearly 6 months. It's important for me to continue to stay in touch with them, continue to keep them up to date as far as what's happening in the market, because they're relying on me with information. That's why it goes back to what I said earlier about making sure that I'm on top of the market, reading it every day, every week, till I could relay that to my clients. And what I'm trying to tell my clients is, hey, hold tight. We're coming around. We're seeing a lot more price drops. Nearly 30% of homes that were listed have already come down in price. That's a lot.
That is a lot.
So you are seeing that. We have clients that are just at a certain point they can't go above, and because of that, we haven't been able to be successful in finding a property for them. But I think we're very, very close. So we're going to find something for them, and we're just going to continue to look, and hopefully sooner rather than later we'll get them into something.
All right. Well, let's shift gears a little bit and talk about the future. So what are you feeling? What direction are you feeling like we're heading? And as maybe a comparison, are we in a space where we're looking for a massive downturn? Sometimes you see people talking in that direction, like 2008, the Great Recession, and I understand that you don't have all the answers, but just you've been in the business for a really long time. What do you feel like in terms of what you're seeing now? Does it feel like it's sort of a slow decline, that it's going to sort of level out at a certain point if the interest rates maintain under, say, 7%? Or are there any kind of indicators like that you feel will keep the market in a certain space? That's one question. And the second one is, do we know what a normal market is? Is there a normal market?
Right. I would say that we definitely are seeing the market slow down. I believe that we will continue to see that the rest of this year. However, with that being said, I do not see it in any way, shape, or form what we all went through in 2008, 9, 10, 11. We're just not in that situation. We don't have clients that purchase properties 100% financing. We also are not in the situation where most clients are not underwater. They have equity in their homes today. Now, obviously, if they may have pulled all their money out in the last year and the market starts to soften even more, then yes, there will be some people that will be upside down. But we're definitely not in the situation that we were in 2008. What was the second question? I apologize. I'm trying to remember what it was.
I don't remember either. I think we're just talking in terms of the future. So you did a great comparison of 2008. Why don't you feel we don't feel like we're there? I agree with you. We don't have those crazy loans and things that we had going on. And is there a normal?
Yeah.
The question was, is there a normal market? I mean, is there such a thing as a normal market? And would we even understand it if we saw it?
Yeah. I'll say first, I do not see this market crashing in any way, like I said before. In a normal market, the way I see it is inventory leveling out. I see our normal days on the market, not necessarily a buyer's market or not necessarily a seller's market. To me, that would be quote-unquote normal market. Home prices not being sold for hundreds of thousands of dollars above asking price, or on the flip side, buyers not offering $100,000 to $200,000 less than what the home is being offered at.
Right.
There was a time, and that I could remember. I mean, I would say probably 2013 to 2017, 18. I felt it was a pretty normal market. We saw a normal increase year over year, which is normal for us to see. I still believe, obviously, real estate is our number one investment. Over time, we will see the values go up. So there's never really a bad time to purchase real estate. I believe that we should see 6 to 8% rise year over year in the next years to come. So normal market, that would be in my normal market, would be a normal 5, 6, 7, 8% rise year over year as far as values.
That sounds fair. All right, Michael. Well, I think we're going to wrap it up with the normal market, and maybe we're headed that way. Could you, again, just give us your contact information if anybody wants to contact you or learn more about what you do?
Absolutely. So the best place to get a hold of me would be either email or my cell phone. My email is Michael, Michael, at jacoborealty.com. And that is JACOBO Realty, REALTY.com. Or if you want to call, text 760-445-0060.
Great. Thanks, Michael.
Thank you so much, Barbie. Appreciate you having me.